hope you guys doing fine. I hope you're doing wonderful. This is a brief of gold price action and why I changed my views after I was learning toward the bullish scenario. Now I'm neutral because of the confusion. Would gold follow TLT, which is the bond market, or inversely relate to dollar? The problem is the dollar is below the 10-day moving average and the gold is below 10-day moving average. TLT, the bond market went up, yet the gold market did not follow. So this is the gold chart, the continuous contracts, and what I see right here is this is the volume by price. This where the resistance take place. So this is a resistance. It found rejection. It went below that, the highest trading volume right here, which provides an overhead resistance. And the second one is right here, and it did provide resistance at the upper zone. Then it even at the lower zone here provided resistance. So what is good about gold in the daily time frame is really nothing, except if this bullish crossover take place, which needs an up move for gold to change this MACD and stochastic. As far as the trading volume is concerned, beside the the volume by price, a lot of the price retracement to the downside came with high trading volume right here, right here, right here, right here, right here, and right here, and also right here last week. Okay, so there's nothing bullish about these red bars. So let's look at the weekly time frame for gold, and we do this bad boy. And what do we see? We see that we held to the low. This could be viewed as bullishness, yet it's really not bullishness. People stepped in. Okay, stochastic is down, MACD is down, and there is not enough information for gold at all right here. So let's keep another look. This is the correction, as I called it last time. It was easy to call when you use the disco combo. So there's nothing bullish about gold except holding that low, and it's really not bullish. There's nothing impressive about that. This is GLD, the ETF for gold, and same information. We have a bearish candle. We are almost close to the daily low, and you are below the 10-day moving average. It's always better to trade with the 10-day moving average. And what's bad about this 10-day moving average is the downsloping, which usually acts as resistance, like here, like here, like here. So there's nothing bullish about that except the elevated MACD. When you have this, no, you lost that positive divergence now for the MACD. You did not lose it for the stochastic yet, but there is nothing bullish about that. Silver is the same thing, except that you have a low and a higher low, and so far you had a higher low, not confirmed, and also you just registered for a bearish MACD right here, which is not beautiful. This indicates a possible down move. Last time it happened, this move happened. So that's not bullish for silver. And also the price action is not impressive. It's identical, almost identical to GLD. When you have a bullish leg, you want this thing to be doubled, double than the GLD price action. TLT, it's at inflection point. You have an overhead resistance with this downtrending trend line, and you are below the 200-day moving average, which you might have as resistance and you might not. Only time will tell. So overhead resistance must be cleared for gold to gravitate toward the bullish breakout in TLT if it takes place. But there's nothing bullish yet. In the weekly time frame for TLT, you have a bullish candle that came, as I stated last week. This is an incisive candle that came with a down leg, which is bullish. This is a bullish candle. It ended with a beautiful Marbouzou right here. It's not a Marbouzou. Yeah, you had some trading here. A quasi Marbouzou, which is okay. It closed at the high and above the 10 period moving average. The MACD did not register any buying signal in the weekly time frame, and the stochastic did. And usually when you come out of 20 or the oversold, good things happen. You could check it out yourself, and we will see. So according to this study, CLT might help gold to the upside, but we have to wait. We have to see it in our eyes because it's a correlation trade sometimes. Gold follows TLT, like what happened in June 2019, right here, when you had this breakout. Beautiful things happened for gold. Yet, the dollar is at an inflection point. You are at the buyer's zone, and it's pathetic. It looks pathetic. It looks bad. TLT, it's much better. Yet, it's very possible. Yeah, buyers might step in. So, according to TLT price action, it's more probable for TLT to go up than the dollar to go up. Usually, you clear some points, and when you have higher bond prices, you have lower yields. When you have lower yields, you have a lower dollar, and vice versa. This is GDX, the gold miner ETF. The only beautiful thing that happened, you had an indecisive candle that closed above the 200-day moving average, and you had another indecisive candle during a down leg, which is okay. Yet the 10 period moving average is very bearish, sloping down. You have an ugly looking MACD. There's nothing beautiful about that, except the possibility that TLT might help everybody, gold and its gold miners. Yet here, the stochastic is extremely low. And in my point of view, the lower you go in the stochastic is the longer the duration you stay in oversold. The longer the duration, the more probably you have an embedded reading right here. Once you have that, the strength is low and the price is stronger to the downside, so you probably go lower before you go higher as far as this study is concerned. And even the MACD is at low reading. Okay, let's look at the weekly time frame for GDX. Same is true. There's no bullishness here at all. Even you had a lower low, you could connect these lows, and you might have a downtrending channel. You assume you are at the buyer zone, and you go up. Yeah, it's just an assumption. So there's nothing bullish yet. and you are at a price memory right here, which brings some buyers sometimes. And also, if you look at the Fibonacci retracement from March low to August high, this is the closest number for the buyers, the Fibonacci buyers step in the weekly time frame. These are the numbers. This number here was closer, the price action here is closer to 2016, late 2016 price action, and early 2017 price action. At that time, the buyer stepped in aggressively at almost 62% Fed retracement. If history repeats itself, 27.51 is on the table, yet you need a stronger dollar and a weaker TLT for that, or weaker bond market for that. In conclusion, it's really confusing because of the strength of TLT, the weak dollar, yet weak gold miners, weak silver, weak gold. And if I am to ask what to do, it's also neutral because of the downtrending trend line and a bearish MACD crossover in a 4-hour time frame. For GDX, 4-hour time, daily time frame. For GLD, let's look at 4-hour time frame for GLD. We might see some bullishness. There's a bullishness in the full stochastic, yet you're still in a bearish MACD crossover mode in a 4-hour time frame. I'm sure the 2-hour time frame in the bullish MACD mode, it's just registered. Yet this contradiction, I don't like the contradiction with the stochastic and MACD, so I will eliminate this for now, this MACD bullishness in the 2-hour time frame. So it's very obvious that even gold itself does not know where it's going. Is it going to follow the bond market or have an inverse relationship with the dollar? Is TLT going to clear some overhead resistance? Would it do what it has done in June 2019? Only time would tell. For now, I am neutral for gold after I was leaning toward the bullish side last week. I wish you guys the very best. If you like, share, and subscribe. And Disco is forever.